All right, let's dive in. Today we're talking about something pretty revolutionary, how AI is completely flipping the script on wealth creation, especially for most of us. We're talking about taking literal pocket change and turning it into a real powerful financial engine. And this quote, man, it just nails the whole problem, doesn't it? For pretty much all of financial history, the game was rigged. It was simple. If it had money, you could make more money. But if you didn't, you were stuck on the outside looking in. It's been this invisible wall for generations. Yeah, and this slide really lays out that massive gap. On one side, you've got the old world of finance, right? You need a huge pile of cash just to get a seat at the table. And on the other side, you have the reality for most of us. We're dealing with spare change from buying coffee. The goals aren't just different, they're in completely different universes. Okay, so let's really dig into that first part. This whole idea of a cruel silent law. Because it's a big deal. It's dictated for so long who gets to build wealth and who gets left behind. It's such a simple but powerful concept. Think about it. That spare change you get from buying a latte, what could you do with it? Financially, it was basically useless, right? You couldn't put it to work in any smart, optimized way. It was just cash sitting on the sidelines. But that's the key part, until now. And that until now brings us to the evolution of the solution. We're going to look at how the whole idea of microinvesting has gone from this kind of clunky, basic concept to something incredibly sharp and powerful. So you remember those first microinvesting apps, right? They were a great idea, a fantastic first step. But really, they were a blunt instrument. They'd round up your purchases and just kind of drop the change into a big, broad fund. It was passive, it was static. The revolution we're talking about now, it's about turning that blunt tool into a surgical laser. It's active, it's happening in real time, and it's designed to optimize every single cent. Okay, so the big question, how in the world does this surgical laser, this neural network, actually work? How does it do anything meaningful with such tiny amounts of money? Well, it really breaks down into this pretty wild four-step process. First, the AI just vacuums up a chaotic storm of data from all over the place. Then it sifts through all that noise to find these tiny, hidden patterns a human brain could never ever spot. Step 3, it executes thousands of tiny, hyper-specific trades in real time. And finally, the magic part, it harvests these teeny tiny profits, we're talking fractions of a percent, that then compound over and over and over again. And look, when we say data chaos, we really mean it. This isn't just about looking at boring old stock charts. No way. This AI is looking at satellite photos of parking lots to see how busy a store is. It's analyzing the mood of conversations on social media. It's even looking at shipping manifests from cargo ships, all to find one tiny, fleeting edge. And this really gets to the heart of the scale we're operating on. Think about it. A human analyst would laugh at a 73-cent investment. They wouldn't even bother. But the AI, it can see a tiny anomaly in some shipping data and decide that yes, the absolute best move at this exact second is to put 73 cents into this one specific company. That level of precision, it's just something that was never possible before. So, okay, that's how it makes trades. But what about risk? That's always the biggest enemy for a small investor, right? Well, the AI tackles this by completely reimagining what your deposit even is. So that 10 bucks you put in, it's not just buying a little piece of one stock. Oh no, it's being spread like a fine mist across hundreds of different securities. What the AI is doing, basically, is creating a custom-built investment fund just for you, on the fly. You can think of it like a personal synthetic ETF. This whole technique is called granular diversification, and it's the kind of super sophisticated risk management that used to be only for like billion-dollar university endowments, and now it's being used on your $10. But it gets even bigger than that. This isn't just about your account in a vacuum. It's about how millions of these little accounts all come together to create a system that literally gets smarter together, an army of small wallets. Which leads to a pretty obvious question, right? If the AI is doing all this for everyone, how does it get better? How does it avoid just getting stale and making the same old moves? The answer is something really powerful, the network effect. It's this awesome feedback loop. See, the more people that join and use the system, the more data the AI gets to learn from. And more data makes for a smarter, more refined AI. And a smarter AI, that leads to potentially better returns for everybody.
Every single person who joins makes the whole system just a little bit smarter. Okay, but now it's time for a really important reality check. Because this all sounds amazing, but it's not magic, it's math. And just like with any powerful new tech, you absolutely have to read the fine print and understand the risks.
So let's be super clear about what this AI can do and what it absolutely cannot do. It can optimize the velocity of your money for sure. It can analyze insane amounts of data and execute trades flawlessly. But here's what it can't do. It can't create time. Compounding wealth still takes patience. And, this is the big one, it cannot, under any circumstances, eliminate risk.
And in fact, this technology brings its own unique set of risks we need to think about. First, there's the black box problem. Basically, we don't always know why the AI is making the decisions it's making. Then there's something called model drift, which is just a fancy way of saying the AI's strategy could get old and stop working as the world changes. And maybe the scariest one, these feedback loops. What happens when millions of AI accounts all try to do the same thing at the same time? They could accidentally cause the exact market crash they're trying to protect you from.
But even with all those warnings, you have to come back to this central, incredibly powerful idea. This really is about the democratization of finance. I mean, for the first time ever, the exact same high-level, institutional-grade brainpower is working for everyone, whether you're investing pocket change or a massive trust fund.
And so that leaves us with the big central question, doesn't it? Is this the technology that finally truly levels the playing field? Or are we just trading one kind of black box for another? Swapping out the old Wall Street gatekeepers for a new set of rules written by an algorithm we don't completely understand? That's the conversation we all need to be having.